Welcome to Money Flow IQs, where money meets learning. We empower individuals to master financial literacy for lasting stability. Our service equips you to make informed decisions about budgeting and saving. Join Money Flow IQs today to achieve your financial goals.
All right, let's get right into it. Have you ever just stared at a stock chart completely frozen? You're wondering, should I buy? Should I sell? Should I just walk away? You're definitely not alone. It's one of the biggest headaches for any trader. But what if there was a way to stop all that guessing and actually start reading the signs?
I mean, it really feels like they've got some kind of crystal ball, right? They nail the bottom, they get out right at the top, and the rest of us are kind of left scratching our heads. But here's the secret. It's not magic. It's not some secret club. It's a language. And today, we're going to start learning a few key words. The answer is right there, staring back at you from the screen. The chart itself? Well, that's like the DNA of a stock, and every single one of those little candles is telling a story, a play-by-play of the battle between the people buying and the people selling. Our job is to learn how to read that story. So this is the big shift we're making today. We're moving away from that anxious guesswork and into confident strategy. And we're going to do it just by understanding what these little red and green bars are trying to tell us.
Think of it like this. The market is always talking. Yeah, most of the time it's just background noise. But every now and then it screams. And these specific candle patterns, that's the scream. It's a clear signal that the trend might be about to do a complete 180. Spotting them is the entire game.
Okay, so let's start with defense first. How do we know when it's time to protect our profits? These are the bearish warning signs, the big red flags that tell us, hey, the party might be over. First up is something called the gravestone doji. And man, it tells a dramatic little story. Imagine this. The buyers are feeling great. They push the price way, way up. That creates that long shadow sticking out the top. But by the end of the day, the sellers came in and just slammed the price right back down to where it started. It's a perfect picture of a failed rally. Now, here's the absolute key: context. This candle means almost nothing if it's just floating around in a messy market. But when you see this thing pop up at the very peak of a strong uptrend, whoa, that is a massive warning that the momentum is dying. And if it's red, that's an even louder alarm bell. Next up, we've got the shooting star. Think of it as the gravestone's close cousin. Same story. Buyers push up, sellers push back down hard. The only real difference is that tiny little box, the body, at the bottom. That just shows the sellers were so strong they managed to close the price even a little lower than where it opened. It's another clear sign of exhaustion at the top. And this quote just nails the mindset. When you see one of these bearish signals, it's not about trying to perfectly time the absolute top tick. It's about managing your risk. It is so much better to get out a little early and keep what you made than to get greedy and watch the market snatch it all back. Okay, so we know the warnings. Now for the fun part, the opportunities. Let's flip the script and look at the bullish turnarounds. These are the signs that the sellers are finally tapped out and it might be the perfect time to buy the dip. This one is called the hammer. It's basically the mirror image of those bearish patterns. Here, the sellers tried their best to smash the price into the floor. That's what creates that long lower wick. But then, the buyers stepped in with a ton of force, pretty much said, not gonna happen, and drove the price right back up. It's just a powerful visual rejection of lower prices. I just love this way of putting it. Think of it exactly like that. The buyers are literally taking a hammer and pounding out a bottom in the market, pushing the sellers out of the way to build a brand new foundation for the price to go up. And here we go again. Context is everything. A hammer candle that shows up after a long, painful downtrend is a huge deal. It suggests that pretty much everyone who wanted to sell has finally given up, and a whole new wave of buyers is ready to jump in. And finally, the dragonfly doji. This one tells an even crazier story of a reversal. For a moment, sellers had complete control. They pushed the price way, way down. But then, in this incredible show of force, buyers brought it all the way back up to where it started. It's a perfect high and a clear sign the sellers have nothing left in the tank. All right, now we get to probably the most important part of this whole thing. Look, you could memorize every candle pattern in the book, but if you don't care where they show up on the chart, you're still just guessing. Location, location, location. That's what turns a random signal into a high probability trade.
And this right here shows it perfectly. On one side, you've got a reversal candle in a messy sideways market. You know what that is? It's just noise. But on the other side, that same candle showing up at a major support or resistance level, those price floors and ceilings where the market is turned before, that is a powerful, actionable signal. In fact, let's put some numbers to this. A reversal signal at the end of a trend? Yeah, that's already a pretty good bet, maybe a 70% chance it works out. But when that same signal pops up at a major support or resistance level, look at that jump. The probability goes way up to around 85%. That extra edge? Well, that's what pro trading is all about.
So how do we put all this together into something we can actually use? Let's build a simple, repeatable checklist. It combines the pattern, the context, and one final, crucial piece.
Okay, here it is. Step 1, you spot one of our 4 key patterns. Easy enough. Step 2, you check its location. Is it happening somewhere important? And step 3, and this is the part everybody messes up, you wait. You don't trade the reversal candle itself. You wait for the very next candle to prove that the reversal is real. That is your trigger to act. So, to wrap it all up, these are your new rules. Bearish signals at the top, bullish signals at the bottom. Context is king. Always ask if you're at support or resistance. And please, always, always wait for that confirmation candle. And if the market's just going sideways with no direction, just stay out. It's the easiest way to protect your money. So, the next time you open up a chart, don't just see a bunch of random noise. Look closer, see the story, spot the signals, and ask yourself that simple question. Because now, you actually have the tools to understand the answer.
Subscribe for more smart money ideas every week.